Activity 8 said, Ayers Electrical decides that 5% of all trade receivables are assumed to be irrecoverable debts and makes an allowance accordingly. You're told that the trade receivable balances are as follows. So for irrecoverable debt, it simply means
debt that you can never receive back.
The debt has gone bad.
Cannot pay back.
The debt goes bad. That is what it means. So here, 5% of all trade receivables are considered as irrecoverable debts. So we start for December 31, 2016, we have our trade receivable for 50,000. So 5% of trade receivable of December 2016 becomes irrecoverable debt. So 5% of 50,000 is 2,500. So that means our irrecoverable debt for 2016 is 2,500. Okay. Done. Then in your statement of financial position, because you have to open a statement of financial position where you have your trade receivables in your current assets.
Yes.
So the 2,500 will be deducted from the trade receivables. So that's the statement of financial position will become 47,500. Then in your statement of profit or loss, the 2,500 that is irrecoverable goes into the statement of profit or loss as expenses. Irrecoverable debts on the debit side. Okay. Clear? Is it clear, please? Is it clear or not? In 2017, we have a trade receivable of 60,000. 5% of 60,000 is 3,000. Our irrecoverable debt in 2016 is 2,500. Now we have 3,000. So that means we can add 500 to it. Get the point? It is expected that our irrecoverable debt going to 2017 will be 3,000. That is what it means. But we have 2,500 in 2016. So we still have 500 left. So this is 3,000. It means 500 was added to the irrecoverable debt.
Okay.
That is 3,000. Clear? Is it clear, please? So the trade receivables in the statement of financial position in 2017 will be deducted by 3,000.
3,000.
So your trade receivable in 2017 account will be 57,000. In your statement of profit or loss, it will be 2,000. It will be 3,000. 3,000. Clear?
And why for 2016 it was 2,000?
2005.
Oh, okay.
Is it clear?
So go to debit side.
Yeah. So in 2018, no.
Right here.
In 2018, yes. In 2018, our trade receivable is 40,000. Remember that the trade receivable for 2017 was 3,000, right?
It went down.
Now, in the trade receivable in 2018, 5% of 40,000 is 2,000. So we have 2,000. So the current balance of our allowance is supposed to be 3,000. So we have 1,000.
Yes.
We have 1,000 left. Yes. So that goes to the credit side as revenue. Do you understand?
Yeah.
It goes to the credit side as revenue for 1,000. Is it clear? Is it clear or not?
Yeah.
So therefore in 2018, the statement of profit or loss and other comprehensive income will be credited with 1,000 as income. Our trade receivable our expenses were supposed to be 3,000.
Yes.
But we incurred just 2,000.
Why?
So we have extra, based on the fact that our trade receivable for 2018 was 40,000.
And why 1,000?
3,000. It was expected to be 3,000.
No, it went down 1,000.
It went down 2,000.
Okay.
So 1,000 becomes an income there. So you credit it. In your statement of profit and loss, you debit expenses, you credit income. Do you get it? So it becomes recoverable debts.
Yes. So
of
1,000 becomes okay.
Is it clear? So your trade receivable in your statement of financial position for 2018 will be 48,000. Will be 38,000.
If it increased 2018 to 4,000, it will have been
on the debit side.
Debit side.
Because it means your irrecoverable debt has increased.
Yes.
Do you understand? But it reduces here. So that's an income for the business.
Okay.
Is it clear? So that's for the 1,000. But your 2018 trade receivables, because as soon as you have irrecoverable debt, you take it away from your trade receivables.
Okay.
So for the trade receivable of 2018, which is 40,000, you now take 2,000 away, which is 38,000. Is it clear? Now the allowance for irrecoverable debt, you have to prepare the allowance. You have to open a ledger for irrecoverable debts. The balance carried down from 2016 is 2,500. On the debit side now, because this is irrecoverable debt account, it will receive it, 2,500 as the balance carried down. On the credit side, you have your statement of profit or loss, which the expenses on the in your statement of profit or loss account, it will be on the debit side, right?
Yeah.
For 2,500.
Yeah.
Your allowance for irrecoverable debt account, you have the statement of profit and loss balance on the credit side. It's an expenses. It will be on the debit side of your statement of profit or loss. In your allowance for irrecoverable debt account, you have it on the credit side, 2,500 for 2016 done. For 2017, the balance carried down, the balance brought down from 2016 was 2,500, which we are adding 500 to.
Yeah.
That gives us the 3,000. So your statement of profit and loss has become 3,000 in 2017, which is the debit side of your statement of profit or loss.
Oh, okay.
So your balance carried down will be on the credit side for 3,000, because for every debit entry, there must be a corresponding credit entry. So now in 2018, we have an income of 1,000.
So balance
so
carried
that
down.
means your statement of profit or loss, because it's on the credit side of your statement of profit or loss, it will be on the debit side of your allowance for irrecoverable debts.
Okay.
1,000.
Okay.
So the balance is still 3,000 from the previous year. So the 3,000 is still here, but your balance carried down will now be 2,000, which is recorded in your statement of profit or loss.
Okay.
So that gives us the 3,000 on the debit side, 3,000 on the credit side, and your balance brought down will be 2,000.
Okay.
Is it clear? Yeah. So that's how to prepare allowance for irrecoverable debt. So if you are preparing allowance for irrecoverable debt, the first thing you have to do is you take away the trade receivables. You find the irrecoverable debt, you take it away from the trade receivables account, then you prepare an allowance for irrecoverable debt account, which is a ledger. Is it clear now?
Yep.
Done.